All right, welcome back, guys. Thank you for joining. We're going to cover some stock market insights, trade ideas, and really look at the technical analysis. What I was looking at, I actually was evaluating a couple of the charts here on the S&P and the triple Qs. And this channel, for the most part, I try to cover the big, longer-term trades, the swing trades, not so much of a day-to-day activity, although I read each day the chart to see if it's giving me any new additional information or confirming information on what I'm seeing for the longer term trends. So I want to point this out. We're going to start out here with the weekly chart because this is the end of the week wrap. So we'll look at what happened last week. And the triple Qs continues to really go parabolic. You can see that we're really starting to turn up now. That we're ultimately just kind of going straight up, basically. So this could continue for, nobody really knows how long it continue. It can just can continue until it doesn't. Doesn't mean it's going to continue. But what I wanted to point out, I was looking at this, and as I roll out, you can see here, this is your bull market for triple Qs. So tech hasn't really broken the bull market. Tech is still in a bull market. From the last 10 years. Now it did break 2 times already here in 2018 and here in 2020, and the Federal Reserve basically backstopped both of these. That's what the Fed's been doing every time they've been trying to backstop it. Now the Fed's used pretty much most of its ammunition. They have they have no more interest rates unless they go to negative, which is possible. I don't know how probable, but it could happen, of course. And the Fed says they're not going to go to interest rates. But again, the Fed was hiking interest rates here and did a 180. And the Fed's basically does the opposite of what they say. So don't listen to what they say. Just watch what they do. And the Fed basically, backstop these. So the point that I'm trying to make is still in a bull market. But we're to the outside of the channel. So you can see here on the Qs. And again, I use logarithmic scaling. So if your charts don't line up with mine, switch to logarithmic scaling. It's a more accurate way to evaluate stock charts. And here is the top end of the price channel that the Qs really was in for the entire bull market. And we've recently broken to the upside. So we're outside of the price channel to the upside. This is not this is not a new bull market that's starting in the triple Qs. This is not how it starts. All right, the bull market is right here, and you don't just create a bull market and then all of a sudden create a brand new bull market price channel. This is a blow off top. That's what this is, or at least that's what I think it is. But it can keep going up. This is the euphoria, the mania that's taking place, and it can go until it ends. I don't know when that is, but what I want to point out is, when it does end, it can get pretty bad. And I know that I'm going to go back here and look at the .com. This is the .com bubble, and this is really what it looked like. The Qs wasn't trading before 1999, so this is the most history that we have. But you can see here, this is the final move of that bubble, and it was a blow off top. You can see it just pretty much went vertical, and you can see the angle of ascent. It's just pretty much straight up. If I roll back here, it's very similar looking in terms of the angle of ascent. You can see it's just pretty much straight up right there. So we have there's some similarities with what's going on. And ultimately, stocks repeat themselves because it's just people. It's just greed. It's human emotion. It's greed. It's fear. And that's really all that the charts show is humans getting into certain psychological phases. And so it looks very similar to this blow off top here. And what I want to point out is a lot of people say, it'll go until it doesn't. Well, here's the thing. This is when the stop or the top ended. And you wouldn't probably have recognized it right here on this candle, because this candle, it's within the range of the previous candles. It looks like a lot like this candle and a lot like this candle. So you wouldn't have sold here, most likely. Now, right here, this candle, it did dip all the way down here. So that candle from the high to the low was a 20% crash or correction or whatever you want to call it. But the week closed still right within the range. And most likely this big dip came in the form of gap downs, very swift moves that most traders didn't have an opportunity to get out, so they probably didn't sell. And then when it recovered here, they felt like it was saved, coast is clear, because you still closed within this range right here. Now, it was a new lower low, but you saw that, there were times in this top, like right here, you made a new lower low right here on this candle. So most likely people didn't get out here because you were still within the range of the previous candle ranges. The next candle right here from the high to the low pretty much took out the entire blow off top move. And you can see from the high to the low, it was a 41% drop, closing the week down 26%. So ultimately, a big chunk of that blow off top was given up in 1 week. And that could happen again. That could be very similar to what we see right here. I'm not saying it's going to, but I'm just saying when the selling comes, it comes swift. And you don't usually recognize it. If you're long and you've been bullish, oftentimes you don't recognize it till you've given back a huge chunk of your profits. And so, let's say we were to get the big sell-off next week. I'm not saying that's going to happen. It's very low probability, but 21% would bring us all the way down to the bottom of this price. 26% would bring us down to the bottom of this price channel and really put us all the way down back into the April prices. So a lot of people think that's not really possible just because the market just continues to go higher and there's no way you could have a 26% sell-off. But like I said, it's happened in the past. It can happen. At the end of blow-off tops, you get these big, swift drawdowns, and there's the proof that it can happen. So don't think that it can't happen. And I'm not saying it's going to. I'm just saying the reason why I don't like this market to the long side is going back to the SPY. And here's the SPY, and here's your weekly chart. We'll just zoom in here. Again, the week, we just continue to move higher. There's this green line that I have marked out. This line, I've had this line marked out for about 2 years now. And this is your bull market trend line in the triple Qs on the in the SPY on the weekly chart. Again, logarithmic scaling. Your lows back to 2009. You've got a reaction here, reaction, several reactions right in here. Then you broke, and every single reaction since has been from below trend, and that's why I think this is the top of we're in the topping we're in a topping formation of the market. Now it's taken years basically, but we're coming off the longest bull market in history, so I think it's within the range or parameters to maybe take years to top out. But you can see reaction here was we were rejected as resistance. And then in 2019, right before the big sell-off, we were trading right here at the resistance line. And this is where I said in a video, okay, I think this is the top of the market. Clearly, as of right now, I've been wrong because we've made new highs. So that was not the top of the market. But, it still doesn't change the fact that I think we're in a topping pattern. So maybe we got a little bit more to go, a little higher to go. So what can the SPY do? Well, this green line, if I compress this to show it, it's about 3.5% higher from where we're at right now. But a lot of the time when everybody's looking at one level, at a specific level, and this level is pretty obvious, I know a lot of professional traders are looking at this level, then you're not going to get right to that level. You're either going to stop short or you're going to overshoot it. I don't know which one. It's basically a 50-50, so you kind of have to just wait. But I think it's just set up to do one of those, and obviously, we could overshoot it and start to run up and have a blow off top, a lot like the triple Qs did. Or this might be, we might be in the area where we're going to start, seeing a reversal or a turnaround. And again, like I pointed out earlier, those reversals, those turnarounds, they can be swift and sharp, and just be prepared for something like that. Don't get recency bias. If we recover this and we're able to move higher and then come back and back test and hold and start to just build upon this trend line up here, then that completely changes the picture that I see in what I've been looking at, and perhaps we are starting a new bull market. That's possible too. I mean, every option or scenario is possible. It's just not necessarily probable. This is a broadening wedge pattern that we're forming. You can see the reactions on the lows, and then the reactions on the highs are really coming. What I see, I see it as this trend line, this bull market trend line. So if we're going to pop up and tag this, we're probably going to, I just don't think we're going to hit it. I think we'll either overshoot it or fall short. Again, I don't know which one. And look at some volatility. UVXY, this is just a volatility derivative. We're starting to break out in volatility. So if I go to the daily here, you can see we had a bearish falling wedge. Sorry, bullish falling wedge. And we broke out last week and started to sell off. So, it's not impulsive yet, but and maybe we get a back test. That's kind of what I'm looking for. So if we go to the hourly here, I'm looking for it to come back down and tag this trend line, hold in this area, maybe grind a little bit lower, not substantially, but just work its way lower, and then you're going to get some sort of impulsive breakout move. That's what I'm thinking is going to happen. Of course, could just break out right here. Sorry, I needed to slightly adjust my trend line to capture the top here. But here's the wedge that's been put in. And this can actually be adjusted to something like this. But this is the wedge that's been put in from the March lows when we had that big sell-off. And we're just starting to break to the outside right here. So that's just another sign that things are looking like they're about to change, or potentially we're topping out in the market. Volatility will most likely be, it'll start running, but it's giving you a sign right now that traders are starting to buy puts or take some, counter trend positions, because that's what volatility is. It measures the puts basically that are being bought. So something to watch for. Here's XOM oil. I just want to point this out. Possible trade here. I've got here the hourly. We had some support sitting right here at about 41.18. You can see reaction here, reaction. It could be slightly lower. I could possibly move it down to like right there at 40.87. That's probably a benefit of the doubt. And look, we undercut it last week and started to recover. So, and they pretty much closed it right at resistance, just slightly below. So if it gaps up or recovers next week, this might be a false breakdown. And usually when you have a false breakdown, you're going to run up. You're going to have a move to the upside as shorts basically cover and bulls pile on. So something to watch for there in XOM. If it rejects, then this might have been a breakdown of support. Again, I've pointed out that we did have this reversal cluster right up here, island top reversal. So that signals that that's a trend change, basically, pattern. So the trend was up right here, continued to be up. We put in the reversal pattern. So now the trend is down. But this could be a false breakdown. So just things to watch for. And I don't know what they're going to do. I'm just trying to point out what could happen. And I'm going to wrap up here with Tesla. There's not too much more going on. So Tesla obviously has been just a monster runner. It's a mania stock. Everybody's talking about it. Anytime everybody's talking about it, it reminds me of Bitcoin. I remember getting calls from friends and family about Bitcoin, in November of, I believe it was 2018, I believe. And everybody was talking about it. Oh, I'm going to buy Bitcoin. Oh, I bought some Bitcoin, this and that. And, the price was maybe around 17,000 or something like that. And I told everyone that's a bubble. I don't know, bubbles can go on and yeah, you can make money. But when you're in a bubble, it's a game of hot potato basically. And who is who gets stuck with holding the bag. It's not a game, it's not a game of fundamentals or any kind of strength. It's just a game of, it's a gambler's game basically. And that's what this is. This is a gambler's game. This is basically, it's going up, buy it because it's going higher. I'll sell it to someone else for a higher price. Someone has to hold that higher price and take the loss. Not everyone who's in this gets to just exit and take their money. There's just not enough money to go around. When people start selling, they have to sell it to someone, and if there's no one left to buy, the prices continue to go down. So this, excuse me, this is going up. Obviously, it's parabolic. There's no signs right now. I see no signals on the weekly chart that says that we had a top or a reversal or anything like that. We've got increasing volume here as prices go up. So in general, there's nothing that looks bearish. It continues to just show signs that it's going to go higher, and it very well may. But I don't chase I never buy these stocks. I don't chase these moves. If a move is doing this, it's parabolic. I sit and I wait, and I look to catch the move to the downside, because the move to the downside is often even more impulsive than it was to the upside. And so oftentimes you can make just as much money trading this short as you can long. You just have to be patient and wait for the signal. There's money to be made on the upside. Obviously, people have been making money to the upside. If they don't take the money, they don't make it. But there's also money to be made on the downside. So rather than kind of FOMO and jump on late to the game, I'd rather be early or kind of wait for the first initial signs for the next game, which will be to the downside, and I'll jump on early and I'll ride that down. And then you'll get the panic sellers, and those are typically who I'm selling to. I'm covering when you get the panic selling move. Just the same as I would be selling on a parabolic move like this. You know what? I did want to cover XLF real quick. XLF uptrend line. Here's your March lows. Uptrend line. We broke the trend. They're back testing once, back tested twice. Still below trend. Trying to recover it. We'll watch next week. If they can recover it, this was a false breakdown. This is what I was talking about. I said they were going to try to save the XLF, but it still has not recovered. So this could easily reject, sell off, and that would confirm that this trend is now broken and we're starting the next leg down. It's very possible that this was the start of the bear market in XLF, and this is your first bear market rally in XLF. And then you start to make the next leg down over the next year, 2 years, whatever it is. And that's very possible. There's nothing that says this is going to just go to the all-time highs like the tech sector has. And, if the financials start to go into a bear market, I'd expect the rest of the market to start to follow. The financials is not heavily weighted in the S&P 500, but it is the lifeblood of the economy. Credit and consumer spending is the lifeblood of the economy. If the financials are selling off and tightening lending criteria, and credit is contracting, then the economy is going to contract, and you're going to see earnings. You're going to see the high-flying tech stocks come down. So it's just something to watch. It doesn't mean it's going to happen, but I just think it's important to understand both sides of the picture and the potential of what might happen. I know it's hard to be bearish for a lot of people that have been making a lot of money in tech stocks, and that's for the most part where all the money is being made. So anybody who's extremely uber bullish on the market is probably plowed into just, crowded into the same tech stocks as everyone else. But again, like I showed you, big drawdowns can come, and consumer sentiment can change on a dime. If you get a 26% sell-off in a week, the consumers are going to flip, they're going to flip pretty quickly. So that's all I got, guys. Thanks. Just wanted to point out some kind of larger term macro charts and trend ideas, and I will catch you guys on the next one.